Hi everyone, welcome back. Let's look at an example. Let's look at the key numbers for the example, and then we're gonna use this example to enter the installment sale for our rental property. So we just assume that we bought a property, a single family home, for $600,000, and that including $120,000 for land. And the depreciation that we took total was $64,001. That was for, the previous year was about $51K, and the current year, which is 23, is about $12,364. And next we need to calculate the adjusted basis. So the adjusted basis is the purchase price minus the total depreciation that we took. So that gives us $535,999. And then the selling price for this property is $750,000. So the assets portion, which is the actual home, like the structure, is $600K, and the land portion is $150K. The gross profit, it's gonna be the $750K minus our adjusted basis, right? Minus this $535,999. So our gross profit is $214,001. To calculate the gross profit percentage, we're taking the gross profit and divide it by the sale price, so that give us about 28.534%. Whatever the amount that we received, we're gonna use the gross profit percentage to calculate the amount that we need to pay capital gain tax on, right? So the payment received in 2023 for the installment sale, excluding interest, right, is $110,000. To calculate the installment sale income, which is going to be going on Schedule D, we take this total payment that we receive, and then we time it by the gross profit percentage. That gives us $31,387.40. The interest that we receive on the installment sale is $1,200, and this one we have to pay tax on this full amount. And I believe this one goes to Schedule B. So note that the gross profit of $214,001 includes a $30,000 gain from selling the land. So therefore, Section 1250 gross profit percentage is, you take 184,001 divided by the full gross profit. So that gives us 85.98%. So for the unrecaptured gain in 23, it's gonna be the lesser, right, between the total depreciation and the portion of the depreciation within that capital gain. So with the gain of $31,387.40, 85.98% is come from unrecaptured 1250 gain. So that the almost 86% of it is come from depreciation recapture. This amount, right, which is that almost 86% of that is the unrecaptured Section 1250 gain, right? So we have to report in the current tax years. So basically, to start in TurboTax, we're gonna go to the rental property details in the rental property section for Schedule E. Let's get to that.